Good morning, everyone. It's Jared here from the Alpha Capital Group. Very quickly this week, we are going to do a quick scan through of the price action over the weekend. I suppose just digest a few bits and pieces, and very much prepare for the week ahead. Now, fundamentally over the weekend, first and foremost, to address the elephant in the room, we saw massive gaps occur in the Sunday night open in both the euro and also in the rubles in Russia. So the rationale, first and foremost, is that European or the euro-based pairs opened with a significant gap. Even still, if we look at euro dollar, approximately 130 point or pip gap on Sunday night's open, and that's factoring in the volatility again with the enforcement of the sanctions on the by the US and more broadly speaking, the European-based community against Russia in terms of the financial and banking sector. And I suppose the intention to try and get Russian banks removed from the SWIFT network. Now, I suppose when we look at the price action we have seen, not just in the euro, not just in the rubles in the FX markets, but particularly gold, it gapped up. I think just over $30. The indices gap down kind of between kind of 1.5%, 1.6%. So in the Dow Jones, that equated to kind of 500-600 points. Similarly in the DAX as well, we saw a massive gap down in the DAX, particularly off the wave of volatility which was ensued in the European-based contracts. So that will definitely continue to rear its ugly head this week, particularly as we look to kind of more developments and updates regarding Russia-Ukraine. Now, I think if we look at systemically as well, with the tensions, yes, Ukraine is looking for a ceasefire on the basis that all Russian troops leave Ukraine, which I really don't think that's going to happen. Also, of virtue of the fact that Belarus is also joining Russia's side as to is Chechnya, and both have facilitated soldiers to help Russia, but also assist with aiding the injured on the Russian side as well. So very much continued conflicts, continued tensions shall remain this week. We've seen all risk assets get completely decimated last week from the indices, which did see a nice recovery into the weekend, but obviously the gap down at the beginning of the week has invalidated a lot of those buyers into last week's close. The crypto markets have been getting hit. A lot of our risk-on currencies have seen a lot of volatility as well. So obviously the stronger dollar has meant a weaker euro, and we've seen that come into play as well. So it's important to understand that the volatility, it's not just in the indices, it's not just in the stock markets, it is across all asset classes, and to remain conscious of that. Like, for example, we looked at oil last week on both Friday and earlier in the week, and we saw oil prices moving kind of 7, 8, 9% in a single day. So that again emphasizes the volatility that we have. Now, not alone just Russia, Ukraine, let's have a quick look at the economic calendar for the week ahead. So data this week isn't as heavy as you might expect. So again, a lot more of the, I suppose, the fundamentals will be coming from, as we said, this debacle or this war between Russia and Ukraine. Now, I suppose the big things that I'm focused on this week in outside of that is as follows. So today, very, very data, or sorry, should I say not very data heavy today. And I think the ECB President Lagarde speech later on today will be important off the back of, one, the economic outlook and the impact upon the economic outlook in Europe, firstly. And then secondly, then in terms of the European mandate and how they're going to, I suppose, handle these sanctions, and obviously the escalation between Russia and Ukraine. Tuesday, we do have some non-manufacturing PMIs in China, but more broadly speaking, the big one would probably come from the RBA in Australia. So if the RBA were to potentially increase rates, you would see a nice bid coming back into the Aussie dollar. But at the moment, expectation is that they will leave interest rates at 0.1%, which will leave it unchanged. So all eyes both on the report and the interest rate decision. Now, it is at 3:30 UK time, so it is late at night or very, very early in the morning in Australia. Other than that, we've got a CPI, harmonized CPI in Germany. We have GDP in Canada, and we've got the ISM in the US. So kind of single pieces of data, I suppose, on the economic calendar. As we turn to Wednesday, Thursday, and Friday, the big one on Wednesday will arguably be the Bank of Canada, the interest rate decision. So it is forecasted that they're going to raise rates by 0.25%, or a quarter of 1%. So again, looking to see, does the issue with Russia Ukraine lead to maybe a broader outlook of pessimism in globally, and will that mean that maybe some of these banks who maybe intend to raise rates maybe hold off for another few months to see if there's an adverse impact? To be honest with you, I don't think that'll happen, particularly in faraway locations like maybe Australia, New Zealand, Canada. But let's keep an eye out on this anyway, because as we know, the forecast is for increasing rate hikes, because inflation, as we know, is at kind of 6.5%, 7% across some of these economies. Now, also on Wednesday, we do have the HICP in Europe. We've GDP again in Australia. So Australia being one of the kind of busier economies this week. And we do have the Powell chair testifies Wednesday and Thursday. So I suppose if we look at this week, month end, February, obviously we know today the pension funds, the FTSE, keep an eye on that into 4:30 to see, do we see that month end sell off for month rebuying and rebalancing of portfolios on Tuesday. But also as well with Fed Chair Powell testifying, how will I suppose the macro policies regarding Russia Ukraine affect their outlook? So see if there's any significant changes by them, or will it be kind of a monitoring, consistent monitoring basis, which I suspect that's probably what he will come out with. We have again Macklem on Thursday, Bank of Canada Governor Speech. Again, that'll come out off the fact of Bank of Canada's interest rate decision and statement the day before. And then Friday we have, as we know, first Friday in the month, we have non-farm payrolls in the US with European retail sales. So again, there's a few important bits of data coming out this week, but no doubt without it that the main fundamentals will be geared towards Russia Ukraine. Updates on, I suppose, the current climate. Is it de-escalatory, or is it a fruitless exercise with more bombing, more kind of fighting to continue? Now, if we look at the indices, I suppose first and foremost, we did see that kind of bounce from, I suppose, Thursday into Friday. Now, overnight, we have seen this massive kind of move down. Now, I'm looking at future prices here, so there isn't any gaps visible. But if you're looking at cash price markets, there is a visible gap here. So worth keeping an eye on that. We've kind of sold off 500 points on the gap down. Price action has seen a little bit of recovery pre-market this morning in the indices. However, very, very fragile, on a very, very fragile basis is kind of what I'm kind of looking at here now. I think if we look at the Dow Jones, all eyes is really around 33,600. It has come back in again this morning after the gap down, and it is holding underneath. As to is the NASDAQ, it has gapped down slightly less in proportion to that of the Dow Jones, comfortably back under 14,200 level, which it closed fairly strongly on Friday, back into this 13,800 level. Now we have seen price action holding this morning around this 13,950, 14,000 level into the open today. So we do have to be cognitive of the fact that the European markets and more broadly the markets in Asia as well have opened lower. So naturally enough, will that factor into the US Open today for month end? Perhaps so. So keep an eye on that. If we also look at the S&Ps, we can see how the S&P's strong recovery Thursday and Friday has also been undone, and the price action has come back to this 4270, 4300 level that we've kind of looked at over previous weeks. Now, again, I think if the bearish momentum is going to continue in the US Open, we'll be looking for S&Ps to break some of these levels, kind of around 4270. We'd be looking for the NASDAQ to kind of reject that 14,000 level, and we'd probably see the Dow Jones come back to this 33,200 level. That would be the logic if it's a case that we continue to open up bearish and the price action remains very much pinned to the downside. Now, conversely, then if we look at gold very, very quickly, gold actually had an opposite effect. So it kind of closed weaker as the indices kind of gathered a little bit of strength Thursday and Friday. But as we know with gold on Sunday night, it did gap higher. It opened kind of just under 1890, and at one stage had pressurized itself all the way into this 1920 level. It actually did come slightly above it and is trading back in this range between 1890, this area here, and the short-term area around 1920. So I suppose all eyes is really to see how does the price action react of this level, because we've seen a lot of consolidation in this 1890 to the kind of 1915, 1920 level before that massive upside break and massive pullback. So if you are looking for gold to be taken home again, this area here around 1920 should be engulfed, price action to take it out and ultimately look for more upside. But at the moment, price action is steadily in the range between 1890 and 1920. Now, one final thing is that over the next week or so, the Alpha Capital Group are running a discount on the funded challenges. So if you are interested, please do feel free to reach out, as there is a 30% discount on respective challenges as well. All right, guys, ladies and gents, we will be back later on this week with another update, particularly on the fact of how volatile these markets are at the moment. So kind of come Thursday, maybe / early Friday morning, we will be doing another update to kind of round out the price action for the week ahead. So of course, be cognitive of the fundamental volatilities in the markets at the moment, not just in the indices, not just in gold, across all these different asset classes, whether it's FX, indices, bonds, treasuries, commodities, and of course your traditional indices as well as stock markets. Okay, risk management should be prevalent. It should be important, because particularly if you're trading under any of these funded programs, without risk management, it will be very, very difficult to succeed. So be cognitive of that as well. Other than that, have a great trading week, everyone.